bank and I bought the checks.
I buy apartments, I send checks.
Yo, billionaire went undercover, help y'all discover who did it best.
Just bought 2 choppers, can't wait till they see the face and they see what I do next. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow.
Yeah, and only then do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heals all ills? Deals. Look who went from meals to bills. It's eat what you kill when you're in the field. And the pipeline overflowing, I don't drip or spill.
We don't seek balance, nah, we want extraordinary. If you really knew my dreams, it'd be more than scary. We got more to spare, ain't no shortage, baby. Winning by the chopper and another for my lady.
Talking about the bird and the strap. Say the word and she handle that.
Fully loaded, put it at the target, and you know we letting off every man. Got my money, who got my back? You can never get it if you never ask.
Big bags, legendary swag. Only one thing better than cash.
When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through, no I won't do, no I won't do, no I'm talking to, not to, you know about to do, what? Walk in that door. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow.
Hey, welcome to the Cardone Zone. Grant Cardone here, and on Mondays I come to you every day at 12 p.m. Eastern Standard Time to talk to you about your money, your finances, and your wealth creation. If you're committed to your wealth creation, make sure you post below, dude, I'm committed, I'm in, and I'm ready to get mine. It's out there waiting for you, folks. It is out there waiting for you right now, and today we're going to be talking about the number one question of this week: is your market too expensive? Is your real estate market too expensive? The answer to that is yes, it is. Yes, I said it here for the first time. The real estate market in your market is probably too expensive, if I knew exactly what market that was, by the way. And despite the fact that your market may be too expensive, if you listen to the rest of this video, you will still learn how to make money in your market, because a market can be overpriced and you can still find deals in that market. And we will do that on the show today. 305-865-8668. I'll prove to you in this Cardone Zone today, I'll prove to you that your market can be overpriced and you could still find a great deal, okay? I'm gonna open this book up, How to Create Wealth Investing in Real Estate. You can get this book on Amazon for 25 bucks. You can also get it at my website for free, if you want it for free.
GrantCardone.com/free books.
Free books, GrantCardone.com/free books. You wanna give Jeff Bezos and his boys some more money? Give it to them if you want to. If you wanna get it for free, go to GrantCardone.com/free books, or you can go to CardoneCapital.com /book at CardoneCapital.com. That's where we raise money for my real estate activities, okay? In chapter six, your first deal, it says pay attention to this recipe and your first deal has a better chance of being a winner in any market, okay? So look, I was here 3 years ago, talking to you guys about 5 caps. Okay, a 5 cap, just so I back this thing off so everybody understands what I'm talking about. A 5 cap basically means that's your percent of return if you paid cash for a deal. Okay, so if you paid 100 grand for a deal and it was a 5 cap, it would make you $5,000 a year. And you're like, but why is it $5,000 a year? It must be overpriced. Okay, if it was an 8 cap, it would pay $8,000, right? You're never going to find an 8 cap today. If you find an 8 cap, run. Tells me everything. If you have an 8 cap, 7 or 8 cap, or a 9 cap, or a 10 cap, that's what we used to buy 20 years ago. People 20 years ago that are looking at the market today are saying a 5 cap 3 years ago, 5 cap is overpriced. I said 3 years ago, the cap rate will go down. So when you guys start saying, is the price of the property too expensive? Let's say a deal's $100,000, or it was. Let's say in what year are we in? Let's say in 2018, this asset was $100,000 and it was a 5 cap, okay? And it paid $5,000. If it was $1 million, it would pay $50,000, right? So if it was $1 million, just to keep this simple, if it was a 5 cap, the cap would stay the same, but the price would change because it's more units or whatever, okay? And this would pay $50,000. If this deal was $10 million, okay, and it was a 5 cap, it would pay $500,000. $500,000, assuming in every situation that I paid cash for that asset, the cap rate determines what percentage I get if I paid cash for the asset. Most people would not pay cash for the asset. Personally, I would not pay cash for an asset, even though last month I paid cash for 2 assets. But there's a reason why I paid cash for those assets, and it has nothing to do with this conversation right here. Today I'm just talking to you about, is real estate too expensive? Let's say this was Arizona, Austin, or Fort Lauderdale. In 2018, you could have bought a $100,000 unit. You could have bought $1 million apartment deal, maybe a couple of fourplexes, or a $10 million. It was a 100-unit deal. It cost, is that right? Let me see. What can I buy for $10 million divided by 100,000? Yeah, I bought 10 units or 20 units, whatever the case is, and that was in Arizona, Philadelphia, Boston, Austin. It doesn't matter the location. It could have been in Singapore or Sydney. If it was a 5 cap, it was a 5 cap. And I said 3 years ago, these cap rates will go down. At the same time, people were saying cap rates cannot go down. It is impossible for them to go down. And yes, sure enough, cap rates went down. What's the point of this? Is real estate too expensive? Was it too expensive then? Only to the people that were in the market, okay? You want to pay attention to this. People in the market rarely change the market. Typically, it's a guy coming in to Arizona. Let's say this was Phoenix, Arizona, Chandler, Mesa, Scottsdale. I've been shopping all those markets. And people in Los Angeles moved over to Arizona and said, I'm going to buy right here in Arizona. I'm going to buy a $100,000 unit. I'm going to get a 5% return. This thing is ridiculous because they were looking in Los Angeles. Let's move to LA. That $100,000 unit, by the way, is $400,000. It still had a 5% return. It's the same 5%, okay? It made $20,000 a year. $2,000 a year. $2,000 return. Is that right? Sometimes these numbers get so complicated. I've done this so many times. I don't trust myself. I never trust myself. That should give you permission, by the way, not to trust your own math. $20,000. So if I paid cash for this, I'd earn $20,000, $1,800 a month. I think that's $1,800. Is it $200,000? You know, it's $20,000. $1,888 a month. And you're like, man, is that a good return? Oh, it's about 300 times better than the bank. The bank's not paying you anything. But let me show you what happened here. This guy takes his $400,000 unit, sells it in Los Angeles, and moves his money to Arizona to get the same 5% return. But what does he buy? He can buy 4 of these, not 1 of these. And he thinks Arizona's cheap, where the people in Arizona are sitting there saying, oh, it's too expensive to buy here. Okay? Don't worry about what things sold for last time. Worry about the return you get. This is not a house. A house is not a home. And a house is not an apartment deal. Houses do not produce cash flow. That's why I hate houses. If you're on the come up and you're trying to create wealth, you don't want a house, you want income from property. If you can buy a house, rent it to somebody else and get income, cool. But the problem with that is it's one door. And if it's one door, what do I say? Don't be a one door. You know what it is, okay? Fill in the blank. Post it below if you know what it means to not be a one-door blank, okay? Why? Because when Janet moves out, you are now responsible for the mortgage, the property taxes, the fixies, and all the cost, okay? All right, so chapter 6, your first deal. Your first deal, okay? Ideally, your first deal would have these criteria, okay? You need some GI. This is what determines whether something's expensive or not. Does it have enough GI, gross rental income, to determine whether you want to do the deal? If the deal only pays $500 a month, is that really enough gross income for you to even bother doing the deal? Even if the whole 500, you keep it 500 times 12 and you kept all of it, that's $6,000 a year. Do you really want to sign a mortgage, go through the contract, have this obligation, this liability? This is a liability, by the way, okay? When there's termites, bed bugs, insurance, fires, property taxes, all the things gonna have. Somebody drives by, slips, somebody hurts themselves on your property, all those. Is it really worth $6,000 a year? In chapter 6, I explained to you, your first deal should really produce $24,000 of income to you before you would even look at that deal. Net cash flow. Cash flow is one of the things that we study here. I want cash flow, net positive cash flow. I need enough GI to produce enough cash flow to pay me at least $2,000 a month. It isn't arbitrary. I'm just saying, if you're going to invest actively in a piece of real estate, if it doesn't pay you at least $2,000 a month, why are you bothering with it? If it doesn't hit this threshold, you should be a passive investor with someone that knows what they're doing. Okay, so you can earn $500 a month as a passive investor right here. You could be in a REIT. I'd rather see you be in a REIT than be an active owner of one property that only produced $6,000. So you're like, okay, but how do I know if the property's too expensive? Okay, watch what happened. Let me just show you some of these other things here, okay? I need other income. There should be other income from the property. There should be expenses included here, a lot of expenses. You need to have expenses in a property. You don't want to skimp on expenses. You need an NOI that can grow, okay? 1, 2, 3, 4, 5. These are 5 things you need, and this is the most important one right here, the cash flow. Do I have enough cash flow to keep this deal, to warrant being in the deal? And how do you know something's too expensive? If you go to Austin, Texas today, okay? Austin, Texas is going to be a 3 cap. Who's paying a 3 cap? Some people are paying a 2 cap, 2.5 cap. It could go to a 2% return, a 2 cap return, meaning if the property does $100,000 of NOI, if you divide that number by 0.02, and this is how you'll see it listed when you guys call in today. Somebody's going to tell me the cap rate divided by 0.02. This property will sell for $5 million, okay? In 2018, that same property, the NOI, if the NOI was the same amount, divided by 0.05, that same property in 2018 sold for $2 million. Is this too expensive? Was this too expensive? I don't know. I know this, in any market, anywhere in the world, I guarantee you I can find a great deal. A deal that provides enough gross income, provides me with enough room to take care of expenses, enough room to pay mortgages, okay, and will provide me with cash flow. Last Friday, and then we'll light it up for phone calls. Last Friday, I was in New York City. I met with some of the biggest lenders in the world. These are the biggest of the biggest, the giants, okay? These are lenders that you cannot personally go to get a loan for a house or your small business, okay? I said, hey, what kind of investments are you guys looking for today? They said, Grant, we have money. Infinite, literally, the guy used the word infinite amounts of money for this asset class. Now, it just so happens I've been talking about this asset class for as long as most of my people have been working here. Nathan, how long have you been here?
3 years.
3 years. He probably heard the term multifamily the first week he was here. I've been talking, right? What is a multifamily? It is apartments. These are apartments, okay? And what happened was And this is what many of you don't understand when you're pricing your asset class. When you're looking at the price of an asset saying, hey, is this a good decision? Should I pay this much? Will it be worth more money today? You have to understand money flows. Money is flowing into the market. When COVID happened in 2000, what was that, 2020? Hotels got crushed, right? Retail got crushed. What else got crushed? Senior housing got slammed. Student housing got destroyed. Okay? Why am I talking to you about all this? You're like, I don't invest in that stuff. No, but you need to understand that the Goldman Sachs, the JP Morgans, the big sovereign wealth funds, the New York Lifes, the MetLifes, the KKRs, these are these giant $1 trillion behemoth companies that have massive, Allstate, State Farm, they have massive amounts of cash flow that they require to pay their pension funds, okay? The teachers' credit, okay? The CalPERS, the California Teachers Credit Union, the Firemen Credit Union, the Police Pension Fund. These are massive, massive funds, billions and billions of dollars that need cash flow to pay their retired firemen from 20 years ago, okay? You're talking hundreds of billions of dollars that has to go out in cash flow. And those people, those pension funds, those groups that I just mentioned, are looking for asset classes they can invest in that throw off this cash flow. I'm just trying to keep this as simple as possible, okay? Apartments is on this list, okay? When 2020 came and COVID freaking slaughtered the marketplace, this came off the list, this came off the list, this came off the list, and that came off the list, and it left one asset class on the list. And all this money now is going to one asset class, okay? That's why you're hearing Blackstone move into single family housing, buying tens of thousands of units. That's why you see in Houston, Texas, or in Austin, or in Arizona, across literally the Southeast, all the way up the coast into the Carolinas, you see 20 people lining up to buy a house, and the person that gets the house is not going to even live in it because they pay another 20 grand to buy the house so they can rent it out to someone else. We have a major opportunity and a major problem in this country. Remember, every problem is an opportunity. We have a shortage of housing, affordable housing in this country, and that housing is now being consumed. Actually not being consumed, it's being invested in, not consumed. Johnny was going to buy the house. Grant walks in and says, hey, you know what? Johnny, you were going to buy the house for $450. This is happening all over the country right now, folks. It's happening in your neighborhood. If it is happening, if you've heard a story of it, post it in comments. Johnny was going to pay $450. He was going to pay the most of anybody. There were 16 people lined up. They came from all over the place, Colliers, Remax, EXP brokers. They showed the house over and over again. They had it on Zillow and Trulia, and 20 people lined up, and they turned it into a big auction, and Grant Cardone walks in and says, oh, it's worth $450? Johnny's going to pay $450? Good, I'll pay $480. I'll pay another 30 grand. All I want is a 5% return on my money. See, Johnny was making a decision to buy the place based on what he could afford. And he says, I can afford $2,500 a month plus my PMI, plus my insurance, plus my taxes. I can pay $4,500 a month, okay? Or $2,500 a month. And I said, hey, you know what? I'm going to pay more for the property, never going to live in it, and I'm going to rent it to somebody like Johnny for $2,500 a month. Okay, you understand? He's an investor. The guy wrote a check for it. Here, I'll write you a check for $480,000, and he gets a 480 times 0.05. All he needs is $2,000 a month on this deal, $2,000 a month in income to pay for this property. At $2,500 a month, that pays for his insurance, pays for his whatever other stuff he's got. Rents Johnny, gives Johnny a 2 or 3 year lease, puts him in the house, and walks away with $2 grand a month. The investors are driving the market into the stellar light speed. What is it? What is it I'm looking for? I'm looking into the stratosphere. It goes into the lands of 10x. So all I can tell you, folks, is this, okay? Your real estate, as long as you can keep the real estate, here's what you're looking for. For me, a 5% return on a great location is an awesome deal. I'm talking about a 5% return, not a cap rate. I can pay a 3 cap, borrow money for 1.5. Okay, we're actually looking at money right now under 2%. Okay, I can buy, what does that say right there? I'm looking for a return, okay? The 5% cap, a 5% return, I can still pay a 3%. I can pay a 3 cap and still get a 5% return. If I can raise the rents over time because there's no property left in the marketplace, this 3% cap rate tomorrow could end up being a 5% cap because when rents explode, okay, when my rents go from $1,600 a month to $2,000 a month, okay, what is that? That is a 20% increase in my rents should increase the return to the investor. So is it too expensive? Look, if it's a great location, if you know there's an exit, if you can get cash flow, if you can get a good loan on it, if multiple banks line up and say, we love this asset, we want to give you a loan, it's a great deal, okay? All right, 305-865-8668. I know we got our callers on. What I want to do is look at your deal today. Does it provide you with enough cash flow? Is there an exit, okay? Is there a good return on your investment? And what are your choices anyway, by the way, okay? 10-year treasury bill today. 10-year treasury bill and a junk bond. These are completely, and some Bitcoin, okay? What are the returns on a 10-year treasury today? Let me just see here. 10-year treasury, and bring our first caller on.
All right, we got John in Miami.
Okay, 10-year treasury today. Hang on one second, John in Miami. A 10-year treasury today is paying, you lock your money up for 10 years, 1.311%. You lock your money up for 10 years. You will not see this money back until 2031. You guys understand that? And you will earn 1% a year. In 10 years, you will have earned 13% on your money. I have deals that pay me 13% a year. They start out at a 5. We raise the rents, do a better job on the operations. The next thing you know, it's earning 13 and 14 and 15% every single year. That's our target, by the way. Internal rate of return is yearly, okay? Junk bonds. Junk bond today is paying 4%. This is the most high-risk companies in America pay a 4% annual, and it's a high risk. It's called junk bond. Junk would suggest it's junk. You know what I'm saying? Okay. The Bitcoin, the Ethereums, the Dogecoins, the return is 0. It's all risk. Does it go up? Does it go down? Okay. Bitcoin went from 49,000 to 45,000 last week. It went down 4,000. If you got scared, you lost 10% of your money. If you didn't get scared, you're just sitting there with what? I got some Bitcoin. What do you do with it? You can't finance it. I mean, I guess you could. I guess you can get somebody to give you 50% leverage on it. Cash flow, folks. Go for cash flow. That's why I tell everybody, cash is trash, man. This is garbage. This is not really good for you. Not in the beginning. If you're a super rich person and you got $100 million, maybe you want some cash, okay? You want some cash because you're waiting for the big opportunity. But maybe, and this is what I see most people do, most people sit on their cash thinking I'm going to save it for the big opportunity of my lifetime. You don't even practice taking advantage of opportunities. If you don't take advantage of opportunities when they're in front of you, how are you ever going to have the muscle to take advantage of an opportunity? Because you're sitting there saving cash, okay? Cash is garbage. It's garbage. So a couple things you don't want to do. Don't rely on one door to provide your income, okay? And 2, know what your exit's going to be. And number 3, you got to change your expectation of returns when the marketplace changes. Put your money in a checking account today. What's it earning? Okay, 0.018%. That is 0.018. You can get it tomorrow. And Biden might change that. I think Biden's trying to get it to where every time you go to the bank for $600, boom, you got to log in and say, hey, did y'all know that? $600, Johnny. Okay?
Yeah.
They're going to find out about you, Johnny. What's up, Miami? How you doing, brother?
Hey, how's it going, Grant? It's a pleasure to talk to you. So So I just had a question. I live in Miami. I'm 25 years old. The only reason I clicked on this video is because I saw one of the shorts of you talking about you when you were 25 years old. And I'm thinking about getting into real estate. I've been putting a lot of money into a 401k for that reason that you just mentioned, because I wanted to eventually loan against it when an opportunity presents itself.
Yeah.
But my question is right now is, so like I live in Miami. I work in furniture sales, and I cannot tell you like how many people are coming from New York, from California. It's like there's no furniture, there's nothing available. Everybody's coming down to Miami.
Yeah.
I don't know if it's Florida in general, but it's like they're driving up the rent prices.
Yeah,
now
exactly.
I'm just figuring out how to survive, because I make probably like $4,000 a month, and you know I pay child support, and I have my son even 50% of the time, and it's just like I don't even know like if I think it would be dumb not to buy like right now. I feel like I've been missing an opportunity, because I feel like everything in Florida is going to appreciate over time, because it is before my eyes. My mom got 50% like a 50% return on her home in the past 4 years.
Yeah, yeah. So look. I mean, what you're saying is, you know, it's only obvious to people that are actually looking. If you live in Miami today, we just had more migration from the state of California than ever in the history of the state of Florida. Okay, that's not a trend, folks. That's not something like this. Isn't like, okay, I'm going to go skinny jeans and it's going to last for 3 years, and then I'm going back to my bell bottoms. Okay, that's a trend. When you move from California all the way to Miami, man, that never happened. Never, ever, ever. You never heard people coming from California to move into Naples, California move into Fort Lauderdale. It never happened. I did it 9 years ago. When I came here, people were like, nobody moves from California to Florida, but they are. They're moving now. New York's been traveling down here, snowbirds, traveling, visiting, hanging out, buying a condo, go back, come back. Now they're coming down, they're bringing their employees, their people, their homes, their primary homes. They're moving out, okay?
And to them, this is nothing also. Their incomes, like a lot of them are working remotely, and they're getting paid like $120,000 salary.
Yeah.
And over here, I'm not making that money. And I'm a pretty decent salesperson. So it's like, I'm just trying to figure out like what I have to do to make money on my money.
Yeah,
because I cannot lose anymore.
Yeah, you can't lose it. So this is a good thing that you just said. You can't lose money. Is your retirement account, your 401k, is that self-directed, or is it you work for a company?
No, I work for City Furniture, so
okay,
I work
good.
for a company.
So they control your retirement account. About 25% of the money invested at Cardone Capital, my company, is from self-directed retirement funds. So any of you out there that have a self-directed KEO, 401k, or an IRA, you can actually invest with us, okay? I would tell you, sir, based on what I said earlier in the show, how much money are you sitting in your retirement account?
Right now, I probably have...
What do you say?
I probably have about 20 grand in there right now.
Okay, and then how much equity in your home? You said you had equity in a home, I think.
No, I don't have equity in a home. I was saying my mom had equity in a home. Right now I rent, and I can't afford to rent anymore. It's like minimum $1,600. I can't even get a roommate because I have a son, and I'm like going through a separation right now.
Yeah.
And he's 1.5. So.
Right. Yeah. So look, man, the first thing I would do is stay close to what I'm. We'll be announcing some things we're doing later in the future here at our company. But I would tell you a couple things. One, I would start looking in Miami for deals that you could do with another group. Like every Wednesday we meet with a group. We got a bunch of people coming into Miami this week. What is it, Wednesday and Thursday? Yes, sir. Wednesday and Thursday, they're coming here. Some of these people, all they have is $20,000 to their name. I would learn the real estate game if I was you right now. I would learn how to syndicate deals, find the right deal, put the money together on a deal, put a little bit of your own money in a deal, and then get other people to help you assist in putting money together in that deal. That's what we'll be doing Wednesday and Thursday in my office. By the way, all of you watching, GrantCardone.com/club, GrantCardone.com/club. If you want to come in this Wednesday and Thursday, we got maybe 4 or 5 spots left open. It's a classroom right here in my offices. I teach the entire 2 classes. People are bringing deals in. If you've been following me for a long time, Wednesday and Thursday this week, that's the first of our 3 meetings. We meet 3 times a year and every week on a teleconference call. Learn this real estate game. I started with no money, $3,700. I borrowed from my mother. Okay, I froze over here, guys. $3,700. I started with no money. I was in worse condition than our last caller, and I got about $3 billion worth of real estate today.
And I hadn't followed you. Like I said, I only followed you because I just saw a video where you talked about you being 25, had nothing, and I felt like that's me. That's how I felt. I felt like I have nothing.
That's awesome, dude. So you know, maybe check out the club, grantcardone.com/club. I think it's $75,000 a year. I think there's a special right now for 25 grand. What I would do first, I would invest in my education before I invest in a piece of real estate. New York, New Jersey, thank you for calling in. Illinois, these are heavily weighted tax states. Okay? One of the groups I met the other day, every group that I met with in New York the other day, this is one of the financial districts of the world. I said, hey, what states do you guys like to invest in? Tax migration. 3 meetings, tax migration. What states would that be? You know what they are. You're in them. Texas, Florida, Alabama, Georgia, Tennessee. Which one you like the best? Florida, Texas, Tennessee. So look, if I go to New York City right now and I look for an apartment, a 3-bedroom, no, here's a studio with 3 beds, $4,200 to $10,000 a month. Here's a little rooftop right here, the Max, 57th Avenue, $6,300 to $8,100 a month. Okay, you guys are like, yeah, but you checking in Manhattan. All right, where you want me to check? Okay, how about I go over to, let's go to Silicon Valley. Silicon Valley. Apartments for rent. Watch these. This is going to be a 1973 property, and it's going to be $9 grand a month. That's why you guys think real estate's expensive where you are, because you're looking with your own vision. Go ask your grandfather how much real estate he should have bought. Okay? Here's the Riverview in San Jose, $2,600. Crescent Village, $2,500. North Park, $2,200. Okay? Let me see if I want to get a little closer. Oh, that's the Irvine Companies, man. He's one of the biggest, he's top 10 real estate owners in the country. Silicon Valley, apartments for rent, close to Facebook. And we'll talk to our next caller. South Bay area homes. Let's see if this is it. I don't know. I have no idea what I'm looking for right now. This is how people, okay, apartments for rent in Menlo. Okay, they went up a little bit, didn't they, boys and girls? $3,200 a month for a studio. Johnny's like, oh my God. Y'all thought it was expensive over here in Miami. How you feel better now? How about this? This is a 1-bed, $4,100 to $7,400 a month. 1 bedroom to 3 bedrooms. Okay. Menlo Park, $2,800 to $4,800 a month. Dude, every one of these rents is higher than what I charge here in Miami. So what does this tell me? It tells me where rents are going. As long as people flow in here, we good. Okay. Show them that deal I'm buying right now. This is Houston, Texas. What do you guys think the rent on this should be? Okay, it is the single best location in the #1 urban market in the largest apartment market in the world. The #1 urban best location. If you're under 45 years old, that is the spot you want to be at in Houston, Texas. What do you think the rents are in that particular property right now? Okay. Okay. Johnny says $2,200. Okay. I think the rents on this property right now, as I bought it, are $1,800. I'm paying $185,000 a unit. No, $285,000 a unit, and I think I'm going to take the rents from $1,800 to $2,200. I think that there's a $400 increase in rents, and there's 646 units. So if I'm going to earn a 4% return on this property the way it sits at $1,800, if I can raise the rents by $400, just $400, get them to $2,200. This is the best location in Houston. Location is the #1 indicator. Number 2, I got cash flow going into the deal. 3, I got a great asset. It's brand new. And 4, I got a great loan on the deal. If the rents on 646 units, and I'm not saying they will, I'm just saying if they do, if I get the rent, a $2,200 a month rent, and I can show you these rents in New York City would be $9,000 a month. Okay? If I can get only $400 a month times 12, I would increase the gross income of this property by $3.1 million. If I can operate the property, if the $1,800 a month takes care of the expenses of the property in that entire 3.1, if it actually hit the bottom line, I would create $77 million worth of new value. So the guy that sold it to me thinks he's getting a good deal. I bought it, I think I'm getting a better deal. He's going to make $25 million, I think I'm going to make $77 million. He built it. Took him 3 years to build it. He's got a bunch of liability building it, a bunch of threats, bunch of worries, bunch of problems. I walk in, I get cash flow the first month. He's never got a penny of cash flow. Let's talk to our next caller.
We got Nick in Hollywood, Florida.
Hollywood, Florida is on fire.
Hey, Grant.
Brother,
Love your work. I hope you can hear me clearly.
Yeah, how you doing, man?
So I'm good. So I'm one of the snowbirds, actually. I moved from New York City.
Yeah.
I work in the field of finance. I work for a large macro fund. Came from nothing, just like you. Have done well, but I love the simplicity of your investing approach. You know, it's extremely clear. And I had one question about a deal, but before that, I also wanted to mention that I have a 3-year-old daughter. And on one of the recent interviews, you mentioned somebody asking you, how much should you push your child? And your answer was extremely elegant, saying, don't push your child, just push yourself. And I think it's so true. So I think you're great. You live what you preach. So really love the work you're doing. So the question I had for you was this. I'm looking at my first deal in this space. I have a lot of other investments. I'm looking at 611 Northeast 28th Street, Wilton Walk. And I'm comparing this to, just your fund.
611
all the
Northeast.
hard work. So what I'm thinking is, in terms of comparing this deal to just investing in, one of the funds that you have.
Yeah.
But I'd love to get your thoughts.
Give me the address.
I really like
give me the address again, my friend.
Great stuff. So let me know. It's 611 Northeast 28th Street, Wilton Walk.
28th Street. In Miami?
This is in Fort Lauderdale. 611 Northeast 28th Street.
Yeah, it's not showing up for me for some reason. Okay, yeah, I see it now. Is it called the Wilton Manors?
Yeah.
Yeah, okay. So look, he's doing the right thing here. He's going to compare an active investment to being a passive. And you guys should do this. All of you should do this in the beginning. You should compare active versus being a passive investor, okay? And some people just want to tinker. They have to be the active investor. They're like, I got to do it myself. Okay, well then do it yourself. Some people have to cook. Some people just want to eat. Some people want to eat and cook a little, but they don't want to be responsible for the whole meal. They just want to bring one dish. So in investing, you got to do the same thing. How many units do you have here?
18.
So these are 18 units?
Yeah.
Okay, so this is in Hollywood, right?
No, this one is in Fort Lauderdale.
The property,
611 Northeast 28th Street.
Got it. You're in Hollywood. That's what I got confused. Okay.
Yeah, I live in Hollywood. Yeah.
Got it.
Yeah.
Okay, so I'm just looking at the property. It looks like somebody just rehabbed this, right?
Yeah.
Yeah.
I worked the numbers, looking at the cap rate, worked out a few things. But I'm just wondering, if you're doing all the hard work.
Okay.
I was just comparing it to, let's say, 10x living at Fort Lauderdale.
Yeah.
So
give me the numbers. What do they want for the property?
9.5 million.
9 point. How much is it?
9.5 million.
Okay, and how many units is it?
18.
18 units. Okay, so let's just do the first math. I'm gonna always 9.5 divided by 18. So you're paying $527,000 a door.
Yeah.
Okay, now can you show them the deal I'm doing in Houston right now? That's I'm paying $285 a door. So just use that as a metric comparison. What are the rents on your deal?
Average is $3,150 per unit.
$3,150.
So depending on $3,150 per unit.
Yeah, these are massive units, by the way. One thing I saw about them: big can be good and it can be bad. And the bad part is you could have 12 people in that one unit. 3,150 times 18 equals $56,700 a month if they stay rented, and they probably do, right?
Yeah, so they don't have, so 100% occupancy leads to an annual rent of $680,000.
Yeah.
Ballpark, $56,700 per month that you mentioned.
Yeah. And I'm going to take 40% of this number because you're going to probably manage it yourself.
Yeah, I don't know actually, so I have to do all that. That's why I'm comparing it to one of the investments where you're doing all the hard work, but yeah.
Yeah. So look, you know, if I'm going to manage to about a 50% gross income. So
okay.
I think that my expenses, particularly in the state of Texas or Florida, where taxes can be, you know, property taxes are tough, right? So I think my expenses are going to run 48 to 50%. But let's say you can operate it for even 44. Okay, that means you keep 56% of the 680. And that means the NOI is going to be $380 a month. Now, this assumes you're 100% occupied, which is almost impossible to do. Fannie Mae won't even give you credit for that. But that being said, the deal's $18 million. Is that right? Yeah. No, it's not 9.2 million. It's 9,250,000.
9.5. Yeah.
So you need 30% down. So the way the financing is going to go, it's going to go 9,250. You're going to have to put about 30% down. So what is that? 2.8, something like that. 0, 5,
yeah.
4, 6. You're going to finance 6,450. 6,450. Your interest rate's going to be about 3.25. And you're going to have 200, 208, 9. What was my NOI on this deal? 380. So let's just see if it's worth it. You got $380,000 worth of NOI. You got this much debt. This is your debt, okay? So you're going to make $179,000 a year. And you put down how much money? We put down what? 2.8. So 179,000 divided by 2.8. And you earn 6% on your money, 6.3% on your money. So my deal is going to, show my deal again without any work. I'm 4% year one, and I think I go to 15% as I sell the property. My location is ridiculous, okay? I'm going to sell it. My entry is half per unit what yours is. So either mine's underpriced by $285 or yours is overpriced. And I'm not saying yours is overpriced, okay? If I was on the come up, I'd go buy that deal.
Right.
I go buy the deal. I don't I don't like your entry price though. I know the Florida market better than any market. I'm probably one of the top 5 most active investors in the state of Florida right now. Your entry level, I don't love it.
I completely agree with you. I was comparing it to the 10X living at Fort Lauderdale that you have.
Yeah.
I know you're comparing it to Houston. But in general, if the tax treatment on both is going to be the same, I'd rather go in one of your funds as compared to dealing with the property and dealing with all the headache.
Yeah.
That's what I'm thinking.
Yeah. So you're going to get all the same benefits, by the way.
From a tax perspective, right?
1,000%. And you get all my efficiencies, right? So look at this property right here, okay? Now, the same property he's looking at, this property right here will do 6% this year, by the way. Okay, which one you want to be in? My entry per unit is lower than yours.
Right.
And I got scale. This 400 units, you got 18. So I would tell you, what is your first name again?
Nick.
Yeah, Nick, how much cash are you sitting on?
Liquid about 4.
4 million?
Yeah.
Yeah. So like that property right there, that I'm showing you, right? We closed that last Christmas, December, before COVID.
Right.
No. When was COVID?
This is, okay, I see it. It's just the video is coming with a lag, but I see it.
Yeah, there's a lag. But the people that invested with me, you could have invested $4 million with me on this deal. It started out at 4%. Within 1 year, it was at 6% cash flow. But here's what people don't know about that deal. They're like, 6% is nothing. I'm like, okay, but did you know that $4 million that you invested, we closed the deal on December 20th. $1.6 million was your write-off for owning the property for 14 days.
Interesting.
So you didn't even get a damn check. You sent me $4 million on December 20th. I filed a K-1 on your behalf saying you lost $1.6 million because you owned that property for 16 days.
That's interesting.
Yeah. You would never get that on this other deal. Why? Because the deal's too small. It doesn't have the acceleration of depreciation or the advantage of this much appreciation, nor do you have, because of the cost of the deal, you probably don't have the ability to pay for some of these other services like cost segregation to accelerate a bunch of the depreciation in the first month that we own
So
it.
you're using a 40% accelerated depreciation on the investment, right?
Well, we actually were trying to write off the entire property in the first month, but you can't write off the land. So whatever we can accelerate onto the building, okay, we wanted to. Okay, one of the reasons I bought this building, the one you're looking at on the screen right now, is because number one, the location was sick. Number two, I had cash flow day one. Number three, I had great debt on it. I think the debt was 2.5%. And number four is because I got all this depreciation in year one. Based on that, I love that this gentleman, by the way, is extremely intelligent. He is comparing an active investment to a passive investment, okay, where he's not getting phone calls. When you have 18 units, let me just say this. When you have 18 units at $3,000 a month, it's paying $54,000 a month, right? You're going to probably pay $5,000 just in management fees per month. So you're probably going to pay 10% a year, just in 10% of the gross income in management fees. We pay 2 to 3%, 2.5 to 3% depending on the asset. So I'm almost one third, 67% lower just on management fees. Unless you're going to go manage a deal yourself, which if you're going to manage this deal yourself, I promise you're going to have $5,000 worth of phone calls every month. Let's make sure we get his number. I'd like to show him the deal I'm working on. I think you're going to be too late to get in my Houston deal. We close on the Houston deal this afternoon. That deal closes today. But if I could get you in that, there's going to be a similar opportunity on this big behemoth right here, if you want to invest with us. Okay, let's talk to our next caller. Thank you, Nick. That was awesome. And let me just say before I go to Adam in New York, I suggest to everyone, your first investment the smartest thing you might do is to be a passive investor so you start seeing how it works and what is to be expected. To be an investor does not mean you be a manager. Some people want to be an investor and a manager and just become a manager. I own the property, okay, but you're running it into the ground, dude. You could be a good investor and a terrible manager. You could be a great manager and a bad investor. Okay, all right, next caller. New York.
Hey Grant, how you doing?
Good, buddy. How you doing?
Good. I actually spoke to you during the pandemic, but I'm hearing myself. I'm hearing some feedback actually.
Okay. Well, just turn your turn your video off, I guess.
Okay, cool. So I have a deal. It's not in New York. It's actually in Ohio.
Okay.
And I just wanted to get your feedback on it. We put an LOI on it. We had some contracts out, but we actually sort of backed out of the deal. You want me to give you the address?
Yeah, please.
1103 Bel Air Avenue, Bryan, Ohio.
Bel Air
Bellaire
Avenue in Ohio.
Yep, Bryan, Bryan.
Bryan, Bryan, Ohio. Okay. Here we go. We're going in. We're going in deep. How many units?
16.
16 units. How much is it?
700.
700 grand.
Yep.
Okay. Is this it right here I'm looking at right now? Can you see it?
Well, I shut my video off.
Is it like a one-story brick with a new roof? It's got some green paint on it.
Mm-hmm.
Yeah, I see it, man. I see it. How you like the location?
Well, my partner lives in the town over, and when she decided to move out there, since I was a broker in New York and she couldn't find anywhere to live, there's the vacancy. There's like nowhere to live in these towns.
Yeah.
And there's like a wait list to get in to rent anywhere. And I found an off market that was 12 units that we went in on as well. And then it turned out that 3 people needed to be evicted, and then 3 people were delinquent.
That's cool, man. That's cool. But let me ask you this now. It's on the internet right now for $850. It's in contract for 101 days. Or it's in contract. Is it under contract?
I think he updated it. We had a contract out, but we were going back and forth, and we settled on 700.
Okay, so you're paying 700 grand for it. That's cool. And what are the rents?
The gross rents on it right now are $67.40.
Okay, you're paying $44,000 a door, and what are the rents?
But the gross rent is $67.40.
No. What are the rents per month? So they're $500 a unit? Or, I mean.
Yeah, they're roughly around like $425, $500.
Yeah. Okay, dude, you ought to go buy the deal. Is it Section 8?
No.
Yeah, go buy the deal, bro. Shit, buy 2 of them. God damn, man, get you a 6-pack. What do they call it when you go to Kentucky Fried Chicken and get a whole thing? Get a family meal, bro. Buy the whole neighborhood. Get the neighborhood meal.
But Grant, what about the deferred maintenance and like he hasn't done any major capex on it in the past 30 years?
Well, he put a new roof on it. He put a new roof on it. So you got 16 units?
Yep.
Okay, so this is what I would do with the deal, okay? Is it full or no? They got some evictions.
Totally full.
Totally full. So I would go spend $160,000 on the property. I'd spend $10,000 a unit. Okay, the rents are $425. I'd raise the rents $200. I'd put in new kitchens, new floors. We did this 2 shows ago. Rehab the floors. I can't see it, so they're not proud of it. I'd put some landscaping on this thing. I'd take that red brick and I'd paint it white. I'd get rid of that green stuff on the exterior. I'd do asphalt on the what's it called, a slurry coat. Yeah, I'd get rid of those green walls. I mean, it is what it is. I'd spend $160,000. I'd be in the deal at $860. I'd get the rents raised to $625 times 16 times 12. It'll still stay rented. It's going to produce $120,000 a year in income. It's going to cost me 40 grand to manage the deal. It's going to have an NOI of about 80,000 bucks. I might be being too generous here, but. And now the property's worth $1.333 million. How did I do that? Because I know what I'm doing, okay? Just grab the book, folks. It's free, okay? I can't read it to you. If you don't want to read it, grab the video series. I'll deliver it to you. The book's free. The video series, 10 grand, okay? Takes about 16 hours to get through it, and I will go through every single detail. I'll do all this math so you understand it. If you're serious about real estate investing, get serious about real estate investing so you can do the homework. I can look at this deal and say, oh, I know what I would do with the deal. If I live up there, if I know the location's good, I'm going to go in there, I'm going to move the rents to $625. Nobody's going to even know anything happened. The guy paying $425 is paying that much for a damn car. He lives in the car maybe 40 minutes a day. He lives in the apartment 8 hours, not 10 hours, 12 hours, maybe too long. During COVID, he's there all day, all night, quarantined in the location. So that's what I would do with the property. I'd go back and borrow against it at $1.3 million. Watch what I'm going to do.
Here comes the magic.
Here comes the magic. Okay, I'm going to go get a 75% loan on the 1333. Jared, you so funny. Okay, I'm going to borrow $1 million. $1 million. What did I pay for it? $700. Plus, what did I do? I spent $160 on it. That's got me in at $860. I'm going to grab a $140,000 paycheck. Bang! Put the $140 in my pocket. Don't pay any taxes on that. Get a new loan for $1 million, and I'm going to go down the road and do this again. And I'm going to do it till I get to $40 billion. That's where I'm going, folks. Look, every Monday what I do is I come to you to show you how to get started in the game, or how to take the next step, or how to start making some moves. I started with $3,750, and the end of this month we will have $3 billion worth of real estate. Am I bragging? Yeah, you're damn right I am. Let's keep it real. Okay? When you start out with no money and just a dream, man, I can't tell you guys how many times I sat down and wrote on a piece of paper, I own 100 apartments. I didn't own any. I'm a millionaire. I was worth nothing. I was negative 40 grand, okay? I'm gonna be successful. I wasn't successful. I was in a treatment center. Shit. I still had scars, freaking scars bending up on my face where I'd been beat up by some drug dealer. So, look, the dream is real as long as you put in the work. And if you guys go out and try to invest in real estate without knowing what you're doing, you're going to get whacked. Everybody knows, you know, when you're sitting in a real estate table, you know, it's not like a poker game. In a poker game, you look around, you're like, man, who's the fool here? It's you. In real estate, most of you, the foolish thing you're doing is not buying anything. And you're not buying anything because you don't know enough. You know enough, but not enough to know. See, because when you know, I can tell this guy what? Without being, I'd buy that deal, bro. I'd buy the whole neighborhood up. If what you're telling me is true. And then on the rehab, that's what I would do to handle that deferred maintenance, bro. I would handle that deferred maintenance up front. Like at Cardone Capital, we've closed 16 funds. Every fund that I have has got hundreds of thousands or millions of dollars sitting in what's called CapEx, waiting to be put into the property when the property needs money. Do we have any other callers, Johnny? We good? We got 2 more callers. Let's talk to them real quick. I got Jared in the house. Jared, what was your check last month?
Which one, Grant? I got about 12 of them.
Jared got 12 checks from me. He's in like 12 of the 16 funds that I've done. I'm getting ready to send you a bunch of money too.
Let's go.
Okay.
All right, we got Shlomo in UK.
Slow mo, let's get going.
Slow-mo.
What's up?
We moving fast-mo, not slow-mo.
Yeah, well, if you talk that slow, we got to go to another caller.
Shlomo. Where's Shlomo?
Y'all hear that?
Yeah, I did.
Listen to this. Who can fix it?
Hello.
Oh, I can hear it.
Yes, ma'am. What's up? We need more women callers, by the way. Can she talk to me, though?
Shlomo Rosenfeld from Manchester.
Yeah, what's up?
Okay, so I'm 19 years old. I was by your real estate summit, the first real estate summit. It was awesome.
Thank you,
so
my friend.
I've got a question here. Basically, I've got a portfolio of 55 apartments.
Okay.
Now, it's in 9 locations.
Okay.
So the question, so I'll tell you what they want for it, how much it's making a year, and if you can tell me if I should be looking into this.
I can tell you, just you got to tell me what I need to know. What do I need to know?
Okay, so they want $1,660,000 for the 35 units altogether.
Oh, you're going to go through all 9 properties?
No, I'll just give you the price over what the claim they're making for the whole
Okay.
year.
You got to start giving me some numbers, man.
Okay, so they say they're making
Okay, I tell you what,
165,000.
I'm going to ask a question and you answer it, okay? How much
Okay.
do they want for the property?
They want 165,828 for the whole thing.
And how many units do I get for the $165,828?
Sorry, I mixed up.
Yes, you did.
1,660,000 for the whole 35 units.
$1,600,000 for the whole thing, okay? And how many things are in the whole thing?
So it's 9 locations.
Okay, good. 9 locations. And in the 9 locations, how many different properties are in the 9 locations? Or is the 9 locations the 9 things?
Yeah, so it's 2 separate houses. Then
What?
it's
Are you going crazy on me? Okay, 2 separate houses. This is a portfolio. See, these people have been watching my stuff. So $177,000 per property. Does that sound right?
Yeah.
Do you know the gross income of the 9 properties?
It's making altogether 165,000 a year.
Yes, okay, that's awesome. That's the gross of the property, right?
Yeah.
165 divided by 9. That means each property is getting about $18,000 per year or $1,500 per month. Does this seem correct to you, my friend?
Yes.
Okay, I'm having a little trouble with this property. What is the location like?
The location is okay.
Yes.
They're all in different locations, so it's pretty hard.
Yes. How would you rate all of the locations in general?
They're good.
Yeah, I hate this deal, bro. I hate everything about this deal. I hate the fact that you got to go 9 places. You got to collect 9 rents. You got to do 9 closings. You got to get 9 title checks. Like I'm gonna buy 600 units. It's gonna be 1 close, 1 title, 1 appraisal. Bing, bang, bong, jong. And you're like, oh yeah, but Grant, I can't start with 600 units. Then get my book, read the book. You were at the summit. I want you to go back through the book, dude, and I want you to get to the chapter where it says your first deal, chapter 6. That is not on behalf of the devil. Okay, that would be 666. This is chapter 6, cash on cash. I'm sorry, your first deal, page 119. I want you to go back and read page 119. Then I want you to do the A through Z checklist. This book, by the way, is at grantcardone.com/free books, or you can go to Amazon and give that rich dude another $25. He just bought his 2nd yacht. He didn't like the first one. It was only 400 feet. He's like, I need 536 feet. God damn. Huh?
What's he gonna do with the little one?
Can I buy the little one? Can I buy the bitch boat? Okay, bro. So look, I want you to leave this deal alone, okay? I don't like it. And I don't like it because, a lot of reasons. I don't like it because I don't like the way you delivered the information to me. So it's all kind of like, that's part of it. Part of it's the presentation. Hey, you guys want to learn how to present your deals? Come visit with me Wednesday and Thursday. Wednesday and Thursday this week is the first of 3 opportunities that you get to come to my offices, meet with me and a bunch of other investors and lenders. 2 days with me and 100 people. What do we got? 150. But did they all say they're coming in this weekend? Have you checked on it? Check on that, okay? Because we're going to be doing all kind of fun stuff for 2 days, Wednesday and Thursday this week, looking at deals, talking about deals, and raising money for deals. Yes, money will be raised for deals, I guarantee you. I might be investing in some of the deals I hear about. This deal that you just presented to me, bro, I can't say I would invest in this one. I just didn't feel it. Okay? Oh, I've been waiting for Kalila, man. You know, HBO should do a movie about Kalila. We would call it the game of...
How you doing, Grant?
the game of thongs. Kalila, what's
going
up?
on?
How you doing?
I'm good. How are you doing?
Good, good. I appreciate you calling in. Where are you calling in from today?
I'm calling from McDonough, Georgia.
Okay, I love Georgia. That's one of my states.
That's what's up. I'm
Let's buy
calling
some
to
real
tell you
estate.
about a deal.
Let's buy some real estate.
Yes, I'm actually calling you about a deal.
Let's go,
This deal
girl.
is located in. Go ahead.
Give me how many units?
490.
Ooh, listen, we got a player. We got a player calling
Yes,
in today.
I'm
What's the
ready.
address? Give me the address.
7927 Forest Lane. It's
And
in
where-
Dallas, Georgia.
Where
Dallas, Georgia.
where in Georgia?
No, Dallas, Texas. I'm sorry.
Yeah. Oh yeah, you put a little switchy on me there. Okay. Now, how do you know about this property?
I actually just went on the company site called I guess it's called John
JLL.
LaSalle Lane.
Yeah, JLL.
Yeah, JLL.
uh-huh. Yeah.
And I just punched in some of the top markets
Yeah.
for real estate that I've always heard you talk about, such as Houston, Texas, Florida,
Yeah,
the Carolinas,
Dallas,
Arizona.
Yeah, Dallas, Houston, Austin, dude, San Antonio. Like these markets are going to they're going to scream, folks. Whatever you guys think is too expensive. Now, you live in Georgia. What are you doing in Dallas?
I'm in Dallas. Well, I don't live in Dallas, obviously, but I've just been doing a lot of research on the internet with this particular property.
Yeah.
I think it's a very interesting property.
Yeah. What I want you to
actually-
do, I want you to call in next Monday with some properties in Atlanta. Okay. I want you
Okay.
to look. I want you to look at Midtown, Buckhead, and what's that little market just north of Buckhead? On fire, hot.
To my Alpharetta or?
Yeah. And then Buckhead. Buckhead's really beat up right now because of COVID. COVID really hurt Buckhead. But I'm trying to buy in
Right.
Buckhead right now. If you can find me and you some deals, Kalila, I'd do a deal with you. I can just tell from your voice right now, I can do a deal with you.
Yeah, I mean, I'm ready. I'm definitely going to do what you just said, follow direction.
Yeah.
I got to listen to the G-Man himself on this because you've been doing this for a long time. So
Yeah, and look,
Why
I
not
want to
listen?
help people. I want to help people like you learn this game, or even do a deal with you. I like the idea that you went and found a big deal. You and I are not going to go to Dallas tomorrow, okay? But I know I'm going to Georgia. I know I'm going and I'm going to go to Dallas at some point. I just got to get a little bigger before I do that. But Atlanta is a market that we were just in about 2 weeks ago. I was actually shopping there, and I love Buckhead. I love Midtown. I don't want downtown, but I like Midtown, Buckhead, and just north of that town that you mentioned, Aberton or.
okay, yeah, Alpharetta. That's north of Atlanta.
That's what I'm
so,
talking
yeah.
about, Alpharetta. These are great markets, okay? So like on the martini glass, I think they talk about Atlanta being like a martini glass, right?
Yes.
So
true.
anything right in here in this martini glass we like. See, in San Antonio, it's a clock. Not San Antonio, Jacksonville. 12 o'clock, you want to be in Jacksonville, you want to be anywhere over here, right here between 3 and 6. Okay, in Atlanta, you want to be right over here. You don't want to be over here.
Okay.
So let's have a martini together, okay?
Yes, definitely.
And make some money. Okay, all of you that have not, if you have not made your plans to come to Miami on Wednesday, you need to get here tomorrow night. It's happening. Don't miss this. You already paid for it. If you haven't paid for it, go to grantcardone.com/club. We meet 3 times a year, 3 different times a year with me. I'm there the entire time. 2 of them are in my offices, and then the other one is at a big hotel agenda. And it's going to be fantastic. These are real estate investors, okay? If you missed my last one, this is an opportunity for you to come to the first meeting of our club, grantcardone.com/club, grantcardone.com/club. In between the times where we meet together, in between each week, we actually have a conference call, a teleconference call using Zoom, where we discuss your deals, talk about your deals, and help you, assist you in connecting, networking with other people that either want to do debt or lending on the deals, okay? Love to have you guys invested in that. in that program learning, getting confidence, getting your knowledge up, knowing the most important things. Today, what do we talk about? Is your marketplace, is your property, is the deal you're looking at overpriced? Is it? Let me tell you something. I've never made money on a deal I don't own. Listen, I've never made money on a deal I don't own. You can't make money if you don't own the deal. Second, I have never paid too much for a property. In my entire career, I have never paid too much for a property. As long as I had time and as long as I have cash flow, as long as you can hold for long periods of time and you have cash flow to cover you through the down moments, you're not going to overpay for the property. As long as the location's great, as long as it's full of tenants, as long as you have people coming into the market and you have a chance to raise rents over time, you're not going to overpay for your property, okay? I do not believe that the housing market is overpriced. I do not believe that apartments are overpriced. Why? Because prices can go up as the cost of capital goes down. This is what you have going on. This is what you need to figure. Oh my God, everything's so expensive today. That's drama, man. You're getting emotional. Just look at the numbers, okay? The price of the property went up from $100,000 a unit, and maybe it went up to $400,000 a unit, okay? What happened at the same time was the cost of capital went down, okay? This cost of capital right here went down. When this went down and that went up, this is equal. You understand? This is what also happened though. Rents exploded. Okay? The rents probably look more like that than they look like that. I just ran out of board here. Rents exploded. Cost of capital went down. Okay? Of course the property value went up. It should have, and it will always do that, and it will continue to do that. What you got to decide is, do the rents have any upside here? This is the game right here. The game is whether that can continue to go up. If you're buying something for $800 that's renting for $800 a month and you think you can go to $1,200, guess what? You're not overpriced. If you think the cost of capital continues to go down or stays at zero, guess what? The rents are going to go up, okay? And if this changes, if this cost of capital flattens out, guess what happens? You're going to move into inflation. What happens when inflation happens? Cost of every real asset explodes. Get on a train, ladies and gentlemen. Get you a location, get you the cost of capital that's cheap, get you cash flow that's positive. Make sure that location's sick and you got positive job growth, and you will not pay too much for your real estate. My name's Grant Cardone, and you've been watching the Cardone Zone every Monday. I come to you just to lay it down for you, and I'll keep doing that for you until you get where you need to get. I got where I need to get. I just need to keep helping other people, because the more I help people, the more I help myself. Remember that when you make it. Keep helping other people when you make it. When you get out of the come up and you way up there and you got a bunch of real estate put together, you got your business, hey, give back to people, man. Take the time. Take an hour every week. Go to church. Pray to your God. Spend another hour giving back, okay? You guys be great. Remember, cash flow is important and vital. Location is critical. Long periods of time will save your day. Thank you for watching.
Getting money, never losing no. But I'm broke, but now I'm living at it. They just count my zeros with some decimals.
And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico. I invested though when I let it grow.
Benjamins, I got a pocket full. Raise your income and your taxes low. Spend it right and then invest some more. And if you don't believe me, it's my Dr. Cardone.
What you mean? You mean Uncle G? Planting seeds for these money trees. Who got my money, please? Everywhere you